Picture this. You're sitting in front of your trading screen. Candles flicker up and down, numbers shift by the second, and your heart begins to race. In that moment, pause and ask yourself this question. Are you playing checkers or are you playing chess? Because the truth is, most traders approach the market like a quick game of checkers, moving pieces without strategy, reacting to whatever is directly in front of them. Professionals? They think like chess grandmasters. They don't care about the next single move. They care about the chain reaction that follows. Think about a real chess tournament. Every player in that room is planning several steps ahead. A pawn push isn't about winning now. It's about setting up a sequence, maybe sacrificing today to dominate tomorrow. The move isn't the point. The sequence is the point. Now apply that exact principle to trading. Amateurs see one candle and jump in because it looks tempting. Pros zoom out and ask, if this trade runs, how does it affect my week? If it fails, how does it change my bias? If news explodes against me, what's my backup plan? Here's the hidden trap. Amateurs are obsessed with the present moment. They shrink their entire decision to the next few seconds. Should I buy now? Should I sell now? They stare at the flashing screen, hypnotized by one candle. And because of that, the market always catches them off guard. When a breakout fakes, they panic. When volatility spikes, they freeze. When a trade runs, they feel euphoric, until it suddenly reverses and crushes them. Why? Because they never planned further than step one. They never rehearsed the possible chain reactions. Let's put this into a story. Meet Chris, an everyday trader. He opens his platform and sees what looks like a flawless breakout on USD. His pulse quickens, his finger hovers over the buy button, and his brain screams, "Don't miss this move." That's one-step thinking. That's checkers. It feels exciting, but it's dangerous because it's gambling, not trading. Now let's replay the same scenario. Same Chris, same chart, but this time he applies the mindset of thinking 10 steps ahead. Before entering, he forces himself to stop and ask, what if this breakout is fake? Where is my invalidation point? If I lose, how much damage does it do to my daily risk? How will I feel emotionally if this fails? And if it runs, what's my final target aligned with my weekly bias? These questions may sound boring compared to the thrill of let's buy now, but they are the foundation of professional trading. By forcing those questions, Chris shifts from reacting to anticipating. And when you anticipate, you can't be surprised. And when you can't be surprised, you can't be shaken. That's why professionals stay calm while amateurs melt down. They don't try to predict every outcome. They prepare for every outcome. Now here's where I want you to lean in. Imagine never being surprised by the market again. Imagine watching a sudden news spike and calmly saying, this is scenario 3. Time to execute. Imagine seeing a fake breakout and smiling because you already wrote down exactly how you'd respond. That's the edge of thinking 10 steps ahead. But let's deepen this. Chris isn't the only example. Imagine another trader. Let's call her Sarah. Sarah doesn't think ahead. She sees a bullish setup on GBP/USD and buys. Price fakes out, reverses, and she panics. She closes in loss, then immediately re-enters because she doesn't want to miss the move again. Within minutes, she's down twice as much, frustrated and emotionally unstable. Contrast that with Alex, a trader who planned 3 scenarios: breakout continuation, breakout fake, and sideways consolidation. When the fake out happens, Alex simply marks it as scenario 2 and waits for confirmation before entering short. Sarah reacts. Alex executes. They market opposite outcomes. This is the essence of trading like a chess master. You stop living candle to candle and you start seeing the whole board. You realize that every trade you take today is not just about today. It affects tomorrow. Blow your account today, and you've killed tomorrow's opportunity. Risk too much on one setup, and you've sabotaged the next 10 trades. But if you prepare, if you accept that every trade is part of a sequence, you suddenly gain freedom. A single small loss no longer hurts, because you see it in context. It's like a pawn sacrifice that protects the queen. And here's the emotional climax. The market is chaos by design. It thrives on surprising traders. Sudden reversals, unexpected news, liquidity traps, they exist to punish short-sighted thinking. Every time you react emotionally, you hand over control. But once you train yourself to think ahead, the chaos loses its sting. Because you already imagined it. You already planned it. Nothing shocks you anymore. That's why professionals stay calm while everyone else panics. They rehearsed this storm in their mind long before it arrived. Close your eyes for a second and imagine this. It's NFP Friday. Volatility explodes. Candles whip back and forth, retail traders scream in panic, accounts blow up everywhere. But you sit back calm. Because you already planned, if volatility spikes, I don't trade the first 15 minutes. You're not reactive. You're not emotional. You're disciplined. That's the power of thinking 10 steps ahead. So let me ask you again, are you playing checkers or are you playing chess? Because in trading, only those who think beyond the next move survive. The amateurs will always be trapped by the present. The professionals? They'll always stay 3, 5, 10 moves ahead. And if you want to join them, if you want to stop gambling and start trading like a strategist, this is the place. Subscribe now, because every video on this channel is designed to sharpen your trading psychology, to give you the tools to anticipate instead of react. Don't just be another player moving pieces blindly. Be the grandmaster of your own game. Hit that button and join us, because the next move you make could change everything. Every grandmaster has a framework. They don't just sit down and hope inspiration will guide them. They build systems that remove guesswork. In trading, that framework is what I call the 3C method: scenarios, checklists, and cooldown. This is how you take the abstract idea of thinking 10 steps ahead and make it a daily habit. Because here's the reality: if you don't turn mindset into process, emotions will hijack you. The second price moves against you. Let's break it down. First C, scenarios. Before you take any trade, you must build at least 3 possible futures: best case, worst case, and most likely case. Best case, price breaks clean, retests, and accelerates. I'll scale out at my targets, move stop to break even after X pips, and ride the rest. Worst case, breakout fails, reverses hard, and hits my invalidation. I'll accept the full stop, no hesitation, no revenge trade. Most likely case, price chops sideways, testing patience. I'll wait for a clean break before re-entering. By rehearsing these outcomes, you transform uncertainty into clarity. You already know what you'll do no matter what happens. Second C, checklists. These are your non-negotiables, the filters that stop you from taking trades you'll regret. Ask 3 simple but deadly questions. 1. Does the higher time frame confirm the bias? 2. Is there high-impact news within the next 60 minutes? 3. Is this pair active during the current session? If even one answer is no, reduce risk. If 2 are no, the trade is off. That's not weakness, it's discipline. And discipline in trading is profit disguised as boredom. Third C, cool down. This is where most traders collapse. They might plan scenarios and checklists, but the moment emotions hit, especially after wins or losses, they throw the plan away. Cool-down rules protect you from yourself. For example, after 2 consecutive losses, take a 15-minute break. After hitting your daily loss limit, close the platform until tomorrow. After 3 wins in a row, cut risk by half for the next 3 trades. This forces humility back into the system, because the truth is, success is just as dangerous as failure. Fear screams at you, but overconfidence whispers, and it kills more accounts than fear ever could. Now let's put this into action with a real-life sequence. Imagine you're trading gold during the London session. You see a breakout above resistance and feel the urge to jump in. The amateur side of you wants to buy instantly, but your 3C framework stops you. Scenario planning reminds you, if it's a fake breakout, where's my invalidation? Checklist asks, is New York session about to overlap? Is there news in 30 minutes? Cooldown whispers, you just had 2 wins earlier today. Off your risk. Suddenly what looked like an impulsive decision turns into a calculated move or a decision to stay out entirely. Either way, you're in control. This is where curiosity pulls you deeper. How would your trading change if you did this for every setup? Imagine having a decision tree in front of you before each session. If A happens, do this. If B happens, do that. If C happens, step aside. You stop trading feelings and start trading flowcharts. You stop asking, what should I do? And start saying, I know exactly what to do, but let's not sugarcoat it. This is not glamorous. Writing scenarios, running checklists, enforcing cooldowns. It feels repetitive, almost boring. And that's why most traders ignore it. They crave excitement, the thrill of feeling in the zone. But here's the paradox. The boring process is what creates exciting results. Every professional knows this. Their charts don't look magical, they look methodical. Their journals aren't filled with dreams, they're filled with data. They don't gamble, they execute. And here comes the emotional climax. Without frameworks, you are at the mercy of the market. With them, you become untouchable. Because once you have scenarios, you can't be blindsided. Once you have checklists, you can't justify bad trades. Once you have cooldown rules, you can't self-destruct after a streak. You've eliminated the market's favorite weapon, your emotions. Close your eyes for a moment and visualize tomorrow's session. You open your chart and before price even moves, you've already mapped 5 possible outcomes. You know what you'll do if it runs, if it fails, if it chops. Your checklist confirms the trade is valid. Your cooldown rule keeps your risk in check. The market moves wildly, but you stay calm. Why? Because you rehearsed it. You already played this game in your mind. This is the hidden secret of trading psychology. Consistency doesn't come from predicting the future. It comes from preparing for it. When you walk into battle with a sword, you may win or lose. But when you walk in with a sword, a shield, and a battle plan for every enemy, your chances multiply. That's what the 3C framework is. It's your sword, your shield, your battle plan. And the traders who use it survive long enough to thrive. So let me ask you, how would your trading look if you started every day with the 3C method? Would you still panic when price spikes? Would you still chase after fakeouts? Or would you smile knowing you've already written the script? If you're tired of gambling and ready to become the kind of trader who thinks 10 steps ahead, this is your blueprint. And if you want more tools like this, subscribe now. Because the next video will take this mindset even further, showing you how to map not just your trades, but your entire week, like a chessboard. You don't want to miss it. There's a silent killer in trading psychology, one far more dangerous than fear. Fear is obvious. You feel your pulse racing before clicking buy, your hands shake, your stomach knots. Fear announces itself loudly. But overconfidence? Overconfidence sneaks in quietly. It disguises itself as strength. It whispers, you've figured it out. You can't lose now. And it strikes right after a winning streak when you least expect it. Think about it. How many traders do you know who blew their accounts, not because they didn't know what to do, but because they thought they were invincible? Maybe you've even lived it yourself. That one week when everything seemed perfect, 10 wins in a row, the account doubling, your confidence sky high. Suddenly you feel unstoppable. You increase your lot size, you skip your stop loss, you break every rule you swore to follow. And then it happens. One bad trade, then another. And before you realize what's happening, weeks or months of profit vanish in a single day. This is the assassin of progress. Overconfidence doesn't just take your money, it erases your discipline. It blinds you to risk, it convinces you the market cares about your hot streak. But here's the truth. The market doesn't care about your last trade. It doesn't care if you've been winning for 10 days straight. The market doesn't even know you exist. That's the harsh reality amateurs refuse to accept. Let me tell you the story of Daniel. He started with a $5,000 account and traded with strict discipline. For 6 months, he struggled to stay consistent, but eventually his edge began to pay off. Then came the streak, 15 winning trades in a row. His confidence exploded. He doubled, then tripled his account. He felt like he had cracked the code. Stop losses. He thought he didn't need them anymore. Position sizing, he increased it overnight, going from 1 lot to 10 lots. And then came the trade that didn't go as planned. At first he held, convinced it would reverse. It didn't. He added more, sure it was just a pullback. It wasn't. Within 3 hours his $20,000 account was gone. Not because he didn't know how to trade, but because overconfidence made him believe the rules no longer applied. Daniel's story isn't rare. It's the story of thousands of traders every year. And the tragedy is that most of them never recover. They don't learn the lesson because their ego convinces them it was bad luck or that the market is a scam. In reality, they weren't beaten by the market. They were beaten by themselves. So how do professionals protect themselves from this invisible assassin? They fight it with humility. Some reduce their lot size after 3 consecutive wins. Some stop trading for the day after a big win, even when they feel unstoppable. Why? Because they know the most dangerous moment in trading isn't after a loss. It's after a streak of wins. Success makes you vulnerable. It tricks you into thinking the rules no longer matter. Here's the psychological principle at work, the illusion of control. When humans experience repeated success, the brain convinces them they can control outcomes that are actually random. You win 3 or 4 trades in a row and suddenly believe you can predict the market perfectly. You start ignoring rules because you feel you don't need them. But the truth is, even the best traders in the world lose trades. They know trading isn't about certainties, it's about probabilities. The moment you think, this trade will definitely win, you've already lost your edge. So let's make this practical. Here's a rule you can implement today. The 3W rule, win, win, win. Half your risk. After 3 consecutive wins, automatically cut your risk in half for the next 3 trades. This forces humility back into your process. It reminds you that nothing is guaranteed. Another technique is mental resetting. After every trade, whether you win or lose, reset your mind as if nothing happened. Each trade is independent. The last outcome has no bearing on the next. This is harder than it sounds, because your brain is wired to chase dopamine after a win and to seek revenge after a loss. But professionals fight this instinct by building habits stronger than emotion. Write this down on a sticky note and put it on your screen. I am not the market. The market is not me. Every time you feel untouchable, read it. It sounds silly, but it breaks the cycle before it spirals. And here's a deeper layer. Thinking ahead isn't just about planning for market scenarios. It's about planning for your own emotional scenarios. Ask yourself, what do I usually do after 2 wins in a row? What do I do after 3 losses? How do I react when I feel revenge coming on? If your answer is, I usually overtrade, then write a rule. After 2 wins, I stop trading for 1 hour. After 2 losses, I pause for 15 minutes. By doing this, you're not only preparing for the market, you're preparing for yourself. Close your eyes and imagine this. Tomorrow, you start the session with 2 easy wins. You feel great, invincible. But instead of doubling your risk, you follow your 3W rule. You cut risk in half. The next trade loses. No big deal. Your account is safe, your mind is calm. The amateur version of you would have gone all in, blown half the account and spiraled. The professional version of you survives because you planned ahead. That's the power of humility. This is the climax of Block 3, the realization that the greatest threat to your trading is not the chart, not the market, not the news. It's you, your emotions, your ego, your overconfidence. And the only way to defeat that enemy is to plan 10 steps ahead, not just for the market, but for yourself. So ask yourself, what rules will you write today to protect yourself from overconfidence tomorrow? Because if you don't prepare for it, it will find you. And if this lesson hit you hard, if you felt the sting of overconfidence before, don't make the mistake of ignoring it. Subscribe to the channel because the next chapter will give you the tools to master not only your strategy, but your psychology. And once you control yourself, no market chaos can touch you. Let's bring everything together. By now, you've seen the contrast between amateurs who play checkers and professionals who play chess. You've learned how the 3C method, scenarios, checklists, and cooldown, transforms trading from chaos into structure. And you've faced the silent assassin of progress, overconfidence, and how humility keeps you safe when success tries to trick you. But now comes the most important part, turning these lessons into a daily practice that rewires the way you approach the market forever. Here's the question that should echo in your mind before every session. Am I thinking about one trade or about the next 10? If your answer is one trade, you're already trapped in the short-term mindset that destroys accounts. But if your answer is 10, you're thinking like a strategist, like a grandmaster. Because trading isn't about surviving today. It's about surviving long enough to thrive tomorrow. So how do you make this practical? It starts with a daily routine. Imagine this. You wake up, open your charts, and before a single trade is placed, you create a map of 5 scenarios for your main pair. Rejection, breakout, fake-out, continuation, or consolidation. For each one, you write down your exact response. Entry trigger, risk size, exit plan, backup plan. Next, you run through your checklist. Is the higher time frame aligned? Is there news risk? Is this the right session for this pair? If anything is off, you adjust risk or step aside. Then you remind yourself of your cool-down rules. 2 losses, should break, daily loss, stop, 3 wins, half risk. In less than 15 minutes, you've already rehearsed the next 10 steps of your trading day. The result? You're untouchable. But here's the climax. Trading will still test you. You will still lose trades. You will still feel frustration, greed, and fear. Nothing can erase human emotion. But when you've planned ahead, emotions lose their power. Fear can't blind you because you already imagined the loss. Greed can't push you because you already reduced your risk after a streak. Overconfidence can't seduce you because you wrote humility into your rules. You're not just controlling trades, you're controlling yourself, and that's the true secret of professional trading. It's not about predicting where the market will go. It's about preparing for wherever it goes. The amateur reacts, the professional anticipates. The amateur hopes, the professional executes. The amateur thinks about now, the professional thinks 10 steps ahead. That's the difference. That's why most traders quit, and why a few survive long enough to prosper. Close your eyes one last time and imagine the future version of yourself. 6 months from now, you sit down to trade and you're calm. The market moves wildly, but you're steady. Wins don't inflate your ego. Losses don't crush your spirit. You execute like a strategist, like a pilot following a flight plan. You no longer see chaos. You see probabilities, sequences, branches of a tree you've already drawn. You're no longer gambling. You're no longer guessing. You're playing chess in a world full of checkers players. And that's why you're still standing when others are gone. Here's the reflection. Trading isn't just about money. It's about mastering yourself. The charts don't reward intelligence. They reward preparation. They don't care about your feelings. They care about your discipline. The market will never bend to your will, but you can bend your will to survive the market. And when you do, you'll discover that the true edge was never your strategy. It was your ability to think ahead, to stay calm, and to act with clarity when everyone else is lost in confusion. So I leave you with this final challenge. Before your next trade, stop and ask yourself, am I thinking 1 step ahead or 10? If you